Hey everyone, I'm at Lake George in upstate New York, and this is a very beautiful hotel. It's the Sagamore. It's a lot more spectacular from the outside. Actually, the rooms up here are nice, but there's sort of a Soviet-style blocks where we're staying, which they have 7 or 8 buildings that are all identical. But no, Lake George is absolutely lovely, and it's the way it's been described to me is basically rich people would buy a waterfront place in the Hamptons, and people who couldn't quite afford that would buy a place on the waterfront at Lake George up in the Adirondacks. And then the 3rd level down, you would get a place in the Catskills if you're totally determined to get waterfront. But as you can see, it's absolutely lovely. Look at the flowers. Okay, so I'm here addressing a speech on financial markets view of natural gas for the Northeastern Gas Association. So that's, you know, sort of an industry body that attempts to protect the interests of Northeastern gas distributors, natural gas this is. And, you know, that's a difficult job because energy policy up here is just so loopy, and it's really the forefront of the whole idea of environmentalism as a local issue and environmentalism as a luxury. So essentially up here you have a lot of rich people who won't have any gas pipelines in their backyard, and that becomes, you know, a clanging problem. For example, in the case of Massachusetts back in 2022, when they don't have enough natural gas for their power demand surge in deepest winter, and actually end up burning 200,000 barrels a day of oil. And, you know, then Elizabeth Warren, the senator, is saying, yeah, it's all price gouging. My son actually was saying to me, you know, it is all price gouging, Dad. Look at the price of, you know, whatever, a packet of Lay's or something, especially when you look at the shrinkflation that you get in a packet of Lay's. And I'm like, I get that, but my friend Torsten Slok just sent out some academic research, economist research on what was the primary cause of inflation over the period of COVID. And the answer was higher workers' wages. It was the single biggest contributor, wage costs. And I'm like, you know, put that in your Elizabeth Warren price gouging pipe and smoke it. Anyway, yeah, so energy policy around here is super frustrating because obviously you're just 200 miles from the Marcellus, the Saudi Arabia of natural gas. And, you know, what are you going to do about it? It's all up in the air. And of course, a lot of it is Northeast liberal politics, which is this sort of holier than thou environmentalism, whilst Elizabeth Warren, for example, you know, obviously trying to hide the fact that she's on a private jet, because the hypocrisy is absolutely deep in itself, you know, the whole concept of environmentalism as luxury. You know, the fact that you have these wealthy people who are preaching that we shouldn't have gas pipelines is directly damaging to the poor, where energy costs are far more aggressive. And so I really can't stand it, and it bugs me. But can I solve it? No. You know, what we say is we don't make the rules, we play the game. Anyway, it'll be interesting to see what happens in the big debate tonight. You've got Kamala going up against the Don. And one of the big obvious things that's different between the two is going to be the LNG moratorium on new LNG export. They're identifying that as a big deal here. Other stuff, as you know, is unclear. You know, the whole drill baby drill thing from Donald Trump is essentially saying we're going to deregulate in a big way. And a reminder, for example, that the Obama White House fought tooth and nail for what made a ton of sense, which was higher vehicle efficiency standards in the US, CAFE standards. And Trump essentially reversed those. And it, you know, I get that Americans want to drive big cars, etc., but you really don't pay an appropriate price for gasoline in terms of the environmental damage huge vehicles cause. You know, I mean, it doesn't make any sense. And as a result, US oil demand is double Europe and, you know, whatever it is, 20 times India. But most importantly, there are other developed economies, and they're not doing great, I admit, but, you know, Europe is using literally half the oil of the US. And so much of that is just spent going from A to B in enormous empty pickup trucks, which, you know, yeah, okay, fine, whatever. But the whole thing, and by the way, the Democrats are at fault here because they won't lower oil prices. Excuse me, they want lower oil prices because they see it as politically expedient. Obviously, it's a standard given of US politics that you want low gasoline prices for people to vote for you. And the Democrats are completely hypocritical about this. They're talking environment out of one side of their mouth, and on the other, as soon as the oil price goes up, they start dumping the SPR. Anyway, it's bearish enough out there right now that they're actually going to rebuild the SPR, so things are pretty rough in the oil patch. I was talking to a big PM portfolio manager, and he was saying, I have zero conviction right here, and that's definitely an issue. People are really struggling. I'm just waving to my northeastern gas friends over there. You know, that's a major issue in terms of really where do we go from here, because you know, everything's beaten up, everyone's bearish, speculators are short, so it's difficult to sort of know what to do next. Our best effort was to say, let's have a try at buying refining. I think it was fairly low conviction, but what we were saying is, actually with refining, you want to do the dumbest thing that seems to be the case, and the dumbest thing right now would be to buy refining, which is not as spectacularly dumb as we would hope, because actually there are arguments for refining, which is basically too much crude oil and strong demand globally. The strong demand is obviously questionable in the economic environment, but broadly speaking, demand is very strong. And yeah, at the margin it's slipping a bit, but you're still at a very high base, you know, getting towards 103 million barrels a day. So that's outrageously bullish for the oils. What's so extraordinary is that you have, you know, 3 million barrels a day of spare capacity in that context, and held by, you know, let's say in the majority by Saudi, and that just doesn't make the market happy, because you're essentially, and Javier Blas particularly at Bloomberg is banging on about this. We were banging on about it a year ago, and we sort of slightly stopped banging on about it, but now he's picking up on it, that ultimately Saudi's going to have to pay the piper, is going to have to face the music, to mix metaphors. And, you know, continuing to kick the can down the road, to use Blas's phrase, and I think he was calling it kicking the can uphill, is a problematic investment environment. So it really doesn't matter if Saudi cuts, if Saudi drives the oil price up, if whatever, it won't be discounted in the equities. The market's far too smart for that. And, you know, Saudi railing about speculators and how they're going to screw speculators adds to the fact that the market just ignores everything they say in terms of the equity valuations. For the commodity traders, they have a physical requirement to get the oil, and if Saudi cuts production, the price is going to go up. But what you're going to capitalize of that price increase in terms of the equities, if it's all driven by Saudi kicking the can, is not great. And as a result, the sector is not doing well, apart from midstream, because again, the volumes, by the way, look at this wonderful boat. I went on it can you see it? I went on a lovely little tour on it yesterday for an hour. It's absolutely gorgeous. It's the sweetest boat you've ever seen. I don't know if you can see it. I really hope you can. All right, so I'm wandering around a bit here, and I've got to head back to New York. On the Northeastern gas, you know, what they're saying is essentially, up here in the Northeast, warm winters under global warming as a general trend is why we haven't seen an energy crisis sooner. So we're right on the verge of an energy crisis in many of these markets. But the fact that winters haven't been severe has mitigated. And I mentioned Massachusetts burning in 2022 when it was severe for a brief period. They went up to 200,000 barrels a day of would have been distillate burn, and that's not a good thing. And so it tells you that the whole system, and these are the guys, these are the frontline guys that sell you the energy as a retail consumer. So for example, Con Ed sells me electricity, and National Grid out of the UK sells me natural gas. Those guys are both here. They're, you know, very concerned about trying to work out a better policy that essentially would provide more supply. And all of them obviously are talking about the AI demand issue, EVs. There's interesting stuff going on in EVs at the moment. My favorite technical analyst, Rob West, and when I say technical, I mean engineering technical, is lowering his EV forecast quite considerably on the basis that he now thinks that penetration of EVs will structurally be much lower than people had hoped. And he's actually increasing his long-term oil demand forecast by 1 million barrels a day. Essentially, and it's very interesting, going through the potential of income brackets to buy EVs. So I think what we all know, and this is why the Democrats' energy policies are so upside down, so much of this stuff is luxurious, wealthy trustafarians going, hey, you've got to use less energy. I've benefited from cheap energy for my whole life. My parents did. We all got rich, but now you guys all have to use less. It's really punishing to the poor. Anyway, what he's arguing is poor people are not going to buy EVs. I think we all know that, and as a result, EV penetration will max out much more in the 20% range than in the 30, 40, 50% range. And as a result, he's got a higher demand forecast. Okay, oil still looks pretty rough, but the volumes here are important, so we like midstream. We're trying to buy refining here, but it's very tentative, you know, and it does depend on oil continuing to get weaker, which it is. So if demand stays strong and oil keeps getting weaker and Saudi eventually has to capitulate, that should be good for refiners. And we feel that the earnings downgrades in refiners have been really quite material and are probably bottoming, because refining margins are probably bottoming, because now they're getting to the point where you have to shut down Asian capacity. There's numerous other indicators which you can read in the research if you subscribe, where we'll explain to you why margins probably won't get a whole lot worse. But everything you say about refining is with fingers crossed. And the way I opened the let's have a swing at refining bull case here was that, you know, the truly great way to make money in refining, and I've covered it for 20 years, is to do the dumbest possible thing at the dumbest possible moment. And, you know, to be honest, it doesn't feel like the craziest, dumbest thing to buy refining right here. The standard way to play it would be to wait until January and see how bad things are then, and then buy them when everyone's given up. So maybe the fact that we're trying to be bullish here is sign of further downside in refining. As you know, people have said he had a career on Wall Street because you get the joke, and the joke is that, you know, in so many aspects, especially with refining, with the volatility, with the interface between OPEC and US consumers and everything else that refining represents, at least these companies are much better managed with much better strategies, much safer. But the reality is any call in refining is something of a coin flip. In theory, if demand holds up, and Torsten Slok is out saying that if you look at all the indicators economically, the economy is actually going to soft land, then too much crude would be good for refining, and that's basically the argument. Okay, final view for you of the lovely lake, and I'll leave it there. Thanks.